Okay. Hi everyone, welcome back to Phillip Roundtable. I'm Wailun, the moderator for today's session. Technology has changed the way we live and it will continue to play that role. Today, we are delighted to have three panelists with us to discuss on the future of tech and the various factors disturbing its advancement and also what it means for the stock market. Before we start, let me introduce our panelists for today. First, we have Mr. Takeshi Kawamoto. He's a senior equity analyst from Nomura Asset Management UK. Mr. Kawamoto joined Nomura Asset Management in 1987 and has been involved in global equities for his entire career. He is currently the global IT and telecom analyst at the London office. He graduated from Georgetown University in 1987 with a BS in Business Administration, double majoring in Finance and International Management. He is a CFA holder and a certified member analyst of the Securities Analyst Association of Japan, also known as CMA. Second, we have Dr. Tan Chong Ko, the founder and chief strategist of Phillip Asset Management Sdn Bhd, Malaysia, and also the Singapore branch. He's a veteran fund manager in Asia with more than 45 years of investment experience, fine-tuning value investing alongside his innovative investment philosophy of never fully invest at all times, which has successfully weathered through major crises and also the volatile ASEAN market, and substantially increased the wealth of clients in the long run. Reputed for his acute sense of market timing and stock selection, Dr. Tan was labeled as a king of the second board in 1995 and 1996. He was named the Southeast Asia's small cap king in the Bloomberg article in August 2006. In the World Health Creation Conference held in Singapore in 2017, Dr. Tan was named the Warren Buffett of Asia for being truly enhancing value investing. Dr. Tan was also granted the National Outstanding Entrepreneur's Lifetime Achievement Award by the Kingsley Strategy Institute for Asia Pacific in March 2021. And lastly, we have Ms. Nurul Farhana binti Noor Saidi. She is a senior analyst from Phillip Research Sdn Bhd. Ms. Farhana joined Phillip Capital Group in August 2015 as an analyst in Phillip Research Sdn Bhd. She performs unit trust, ETF, and equity research that include constructing model portfolios. The UT universe includes in-house and third-party funds, which includes local and overseas mutual funds as well. She is also leading the team to provide research report for local ETF under the Bursa ETF research scheme and developing in-house quant project for stocks and also macro models. She also participated closely in the development of ETF for conceptualizing, designing, and finalizing the index while working closely with the chief strategist. She graduated from Temple University, Fox School of Business in US with a bachelor in business administration, major in actuarial science, and minor in IT, innovation, and entrepreneurship. She holds a capital market services representative license. Well, that's all for the introduction of our panelists today. Now here comes the first questions. The US Senate has approved $280 billion bill to boost the US chip making and technology. How do you think this bill will benefit the technology sector? Mr. Tak, would you like to start first?
Sure. Thank you for having me. First of all, one thing to remember is that this $280 billion bill that you've just talked about, the US CHIPS Act, only $39 billion will be used for manufacturing. So really not as much as that $280 billion figure. But I do think that this will help America rebuild its semiconductor industry. The US doesn't make anything anymore, and they used to have 37% of semiconductor manufacturing, the US, in 1990, and that's now down to 12%. So the US was leading this globalization charge, but now with geopolitics, now that's going in reverse. So it makes sense that the US is trying to rebuild its own semiconductor supply chain. So the company that will benefit the most from this is Intel. most of this money that will be going to the semiconductor companies in terms of grants, Intel will receive most of the most of the 39 billion. They'll get about 12 billion in grants. They're building new fabs in Arizona, two fabs in Arizona, and also they're going to build fabs in Ohio as well. And so they will be receiving the most grant money. However, the problem with Intel is that they just lowered guidance for this year. And so they don't have enough business right now to fill their current fabs. So the problem more with Intel is, are they going to find the customers to fill those new fabs? That's the bigger question. But short term, they will be getting a lot of money from the government. So the way I look at it is really the bigger opportunity for stocks is to invest in the companies that will be getting money from the government that goes into semiconductor capital equipment. And there, I think the biggest beneficiary is a Dutch company called ASML. ASML has a monopoly on EUV lithography, and you need EUV lithography to make transistors 5 nanometers and smaller. And so all of these fabs that are going to be built and getting money to be built will be the most advanced leading edge fabs, because that's what America wants. America wants leading edge fabs. So Intel's fabs will need EUV lithography, and also TSMC is building a fab in Arizona. Also, it will be 5 nanometers, and they might expand that to 3 nanometers. Samsung is building 5 nanometer in Texas. So these companies will be getting money, and they will all be buying equipment from ASML. And so I think ASML will be a big winner from all this. And also one other key point to keep in mind is that most of the $280 billion from the US CHIPS Act will be going into science, research, and R&D. And so there will be a lot of startups being created that do IC design, right? And these startups will need to buy EDA tools, electronic design automation tools, to design the chips. It is software to design the chips. And the two companies in America that have 70% market share of the EDA tools market is a company called Synopsys and another company called Cadence. These two companies are American companies, and they dominate. It's a duopoly in the EDA tools business. So those are the companies that I think will benefit.
Yeah, thank you, Mr. Tan. Dr. Tan, what's your view regarding these questions?
I think it's quite clear that all this trade war and all this COVID and all this Ukrainian people started to get worried that they should have a so-called production by themselves, and this will have some disruption, but this also create a lot of opportunity. Yeah, that the supplier to set up this plant will benefit. And then the startup will also benefit. But I think my take is that we need to analyze them. We need to analyze carefully. Yeah, those startup actually the production won't come in until the fastest you can do 2-3 years or 3-4 years. But although you say that, since they want to do that, this startup will benefit. They will encourage people to do design. So the key is that we as a local people, how do you analyze and the company that you think will make more money out of it? This clearly also is a disruption. People get a bit concerned. I don't know whether recently you take a look at all these huge company, tech company. You notice the share price has come down slightly. Partially maybe because US market is too high, or actually expecting the disruption to come in. My gosh, yeah, things will change, So we being an investor, we definitely want to analyze in detail we will want to see where is the demand and supplies, So that's my this thing, because not only that, there will be also a lot of foundry, maybe, even TSMC, I was told, and also a global foundry, I was told, also encouraged to set up in USA. And then, of course, this 280 billion, I was told, also may be partially to subsidize people who are willing to ship there, particularly those that has technology like TSMC or global foundry, So there are more. You can see the world now moving very fast. You need to keep on in touch with the information so that you can invest accordingly. Okay, I think I should stop here.
Thank you, Dr. Tan. Ms. Farhana, how about you? What's your view on this?
So technically, just to clarify on this 280 billion bills, right, I'm focusing more on the Shape and Science Act, which is actually amounting about 54 billion. So with the following breakdowns, where about 72%, which amounts to what Mr. Tak has mentioned just now, 39 billion is going to be on manufacturing. Then another 20% of that is actually going to be on R&D, whereas the remaining is going to be on others. So on this context, the main beneficiary are going to be those US chip makers such as Intel, Texas Instruments, Micron, and global foundries, while Taiwanese foundries also, they would be marginally benefited. So although Samsung Electronics did mention that they would build a plant in Texas by 2024, but it will face a competition from Micron in memory space, and also competition on the foundry basis from global foundries. So although global foundries, the most recent 14 nano, 14 LPP FinFET process is actually second source from Samsung Electronics. So when you refer to beneficiary to the technology sectors, right, I would presume that you refer to the high-tech segment, which by definition, high-tech is a term that generally applies to economic and also industrial sectors wherein technological innovation is being emphasized. So under this context, there are two presumptions that I would like to bring upon too. So whether the world right now is divided between the West and authoritarian, and the second presumption is where does all these innovations come from? So since the Science Act itself is essentially boils down to make America great again in chips, so the likelihood of a divided world happening is high. So in this case, the camp that has a better and more advanced chip innovation will benefit more, since software and applications still have to run along with chips and hardware. Development. So some of you might know that chips, be in the future of AI or even quantum chips, it still requires semiconductor design tools and manufacturing equipment. So although recently there is a lot of hiccups in terms of the supply chain due to the raw materials like the silicon ingots, the blank wafer, and also pure gases that use in the process, that all these are equally important, but we should take note that most of these companies that make the design tools and manufacturing equipment such as CADES, Ennis, Lam Research, KLL, or even ASML are actually in the West. So with the export sanction to China and non-China high-tech companies that's happening right now, they should benefit from this trend. So meanwhile, the new innovation that come from the new FANG, which essentially stand for fuel, including hydrogen, agriculture, which includes clean water, aerospace, nuclear, or even fusion, then room temperature superconductor, gold, or even mineral. So R&D into this field will inevitably involve AI and quantum computer, which of course requires super high density memory and quantum chips. So yeah, that's my take on the Chip and Science Act, essentially.
Yeah, thanks, Ms. Farhana. The second question. Since we know that there is a limitation of the semiconductor capabilities due to the Moore's law, what is the potential impact to the semiconductor sector, Mr. Ta?
Yes, hi. Well, in terms of Moore's law, I think a lot of analysts have predicted the end of Moore's law for many, many years. But the ingenuity, innovation, and creativity of engineers has allowed Moore's law to continue to progress very nicely. And in my opinion, I think Moore's law will continue for at least the next decade. One huge reason is ASML's UV lithography equipment. Now, ASML has been working on that for over 20 years. And their Japanese competitors, Canon and Nikon, were also working on EUV lithography, but they gave up because it was too difficult. And so now ASML has a monopoly on EUV lithography. And so that is going to allow the chip makers like TSMC, Samsung, and Intel to get to 3 nanometers. And then after EUV, ASML has the next generation called high NA EUV, which has a bigger aperture. And that will allow for us to get to 2 nanometers and eventually 1 nanometer. So these cycles take a long time. So for the next decade plus, this innovation in EUV lithography will keep Moore's law alive, in my opinion. But there's also another technology that is very important, and that's in advanced packaging. And that's where Malaysia is strong as well. But Intel and TSMC are doing a lot of creative things. Now, one is called backside power delivery. Right now, when you make a chip, you have the transistor signals layer and also the power interconnect layer on top of the chip, on the front side of the chip. And it's integrated. But as these wires, these transistors get smaller and smaller and smaller, the resistance that goes through becomes too high and you have power loss. And so what Intel and TSMC are doing is they're going to put the backside power, the power on the backside and only keep the transistor layer, the signals on the top side. And so that way they resolve this power loss problem. So there's a lot of innovation going on. And therefore, I think Moore's law should continue for at least the next decade. Now, after that, you run into actual physical properties that will limit Moore's law. In about 20 years, when we get to 0.5 nanometers, you start running into the problem of the actual size of the atom, right? Because you need electrons to rotate around the nucleus of the atom to get electricity through, to send a signal. And so we will be approaching in 20 years that limitation of just the law of physics, where you will have to use a different technology. And that new technology, in my opinion, will be quantum computing. However, with quantum computing, you need superconductivity, which means that you need temperatures near absolute zero to run. So we will not have quantum computers on our desks or in our pockets in terms of smartphones, or even in the back room, server back room, or even, private data centers. These quantum computers will reside in public data centers. Okay, the 2 leading companies that do quantum computing right now, Google and IBM. Okay, and these 2 companies will most likely be the leaders in 20 years. So this whole semiconductor industry, the players may change, because right now, Google and IBM are making their own quantum computer equipment to make quantum computing chips, because there's no commercially available equipment, right? So they could possibly be like the equipment companies of, in 20 years for quantum computing. But that's still 20 years away. Now, the applications that will be used for quantum computing, the business model will be like cloud computing, where you rent computing power. So it won't be used for us for like Excel spreadsheets won't need quantum computing power. But one example where it will be required is in drug discovery. Like right now, there's a problem in terms of curing Alzheimer's disease, right? And the brain has 86 billion neurons. And to assimilate all the reactions that are going on in the human brain, it's not possible for like a regular computer to do. So you're going to need something more powerful. So the drug development companies will rent time from Google at the public cloud and rent quantum computing power. That's one application for that. So it'll be a business model change, and regular computers will continue to be used. So at least, but in terms of our investment time horizon, 10 years plus, Moore's law, I think, will be alive and kicking.
All right, thank you, Mr. Tak. Yeah, you talk about maybe we will have 0.5 nanometer in the future. And you also talk about quantum computing from IBM and Google. What about in the near term? What about 5G, and what's the application that we can see in the near future from the 5G? Yeah, Mr. Tak.
Oh, me? Okay. Right now, we have a slowdown. So I think everything will be weak. Like you mentioned 5G, but the biggest market of 5G in this current generation was China. And they had the earliest, fastest adoption of 5G smartphones in the world, which is great. But now everyone that needs a 5G smartphone in China has one. And so the Chinese smartphone market has been very weak. And of course, in PCs, we all had work from home and study from home demand pulled forward. And so right now, PCs are very weak. So I think those are weak. So short term, the demand will be weak for semiconductors, especially in those two areas, smartphones and PCs. However, one strong area, short term and even long term, is in EVs. Because Intel said that the bill of materials for an average premium car for semiconductors in 2019 was 4%. And they're saying that in 2030, the average bill of materials of semiconductor content in a premium car, average premium car, not just EVs, but premium, will be 20% in 2030. So that's a 5 times increase in terms of semiconductor content in EVs. And right now, even in the short term, there's another legislation in America that just passed called the Inflation Reduction Act, and that will be giving subsidies for EVs. And then China just yesterday, they announced an extension of their EV subsidy program. And Europe as well is saying that there will be no, petrol cars on the road by 2050, I believe. So short term and long term, I think probably EVs will be the biggest driver.
All right, thank you, Mr. Tak. That's really insightful. The question number 3, what is your view on the geopolitical tensions between China, Taiwan, and the US, especially on the technology sector? Dr. Tan?
Well, I hope there's no war. There's enough trouble from Ukraine, Yeah. First of all, the assumption is that China will be patient enough and there should be no war. They can continue to go on. Yeah. But if there is, then there's more disruption, because what happened to TSMC? What happened to UMC? What happened to Yagyu? What happened to a whole bunch of them? So the disruption is unimaginable. So you still have to continue to analyze how it will progress. But if you have a war, you know for sure it's going to be quite terrible. Just Ukraine alone, you just look at the inflation number, it's bad enough. Not to mention that there's some uncontrollable water. You need good water when you come to the tax, And if you also have other problems, there will be more so. Yeah. But hopefully, I like to think that there should be no this thing. And with just the trade war, with just trying to protect their own industry, I hope that, there will be reshuffle. ASEAN may benefit, yeah, but we still have to follow all these companies carefully. That's what we always do. Maybe we are more so on the bottom up, you know. We know all these players. We are close to them. We follow them very closely, and we know where they move, you know. Yeah. Now people start talking about going to India also, start going to a bit of China, because China also want to outsource. Yeah. So that's my important assumptions. Other than that, if there is any drastic change, you need to analyze the disruptions. That's my key point. Thanks.
Thank you, Dr. Tan. For the same question, Ms. Farhana, would you like to provide your view on this?
Yeah, thank you for the $1 million questions, essentially, because at the moment, right, we somewhat know that China do have sort of like an ultimate goal to unify Taiwan, although we do believe that the armed unification before 2024 is going to be less likely, sort of like we put a probability of less than 1% at the moment, but we have yet to see whether President Xi Jinping essentially can he marginalize Hu Junhua, who is his VP. So if he can, then he can consolidate his position for the third term. Then any unification strategy will be happen post 2024 Taiwan's presidential election. On the other hand, if the junior Hu, which is Hu Junhua, the member of the Hu Jintao faction, is to be elected into the standing committee, President Xi may not be able to control the hawkish People Liberation Army who advocates armed unification, which actually essentially can happen anytime from now on, and even as we are discussing at the moment. So either way, this will ensure that the world is split, and that would boil down to the technology sector as well. So that's why, to a certain degree, this sort of like the whole geopolitical tension, and then ever since before, there's also the US-China trade war happening, and then during the COVID period as well, most companies actually taking business continuity plan more seriously to a certain degree, because we know that all these things can happen overnight, and when it happens, at any cost, business do have to continue, right? So that plan sort of like brought forward, and we do see some localization happening, but it's just that when it comes to localization movement for factory, it can't happen overnight. So it has to take a very long time for it to actually happening. So in the meantime, the trend of factory automation, we do see it happening. So that actually put a positive note to the technology sector, because essentially for factory to do automation, a lot more chips, a lot more all these semiconductors are required for factory automation to take place essentially.
Thank you, Ms. Farhana. I have one question here. We know that SML is not allowed to export EUV machine to China, and now SMIC can produce 7 nanometer. What about beyond 7 nanometer? What about 3 nanometer? Do you think China has the capability to do so? Anyone would like to answer my question here?
Well, maybe I'll take a first crack at that. In terms of 7 nanometer, it is possible to use multi-patterning with traditional lithography to make 7 nanometer. But to make 5 nanometer, my understanding is it's impossible. So you will need EUV. So for China to get to 5 nanometer and 3 nanometer, I think it'll be extremely difficult. And especially now that America has extended its trade restrictions to 14 nanometer equipment. So now AMAT, applied materials, deposition tools, etching tools, will not be able to go to China as well, to SMIC. So that, so the ability to do 7 nanometers with double patterning, that may also not be possible in the future if, these extra trade restrictions, not just on EUV, but on advanced 14 nanometer and below tools also get restricted. So unfortunately, as Dr. Tan said, Nobody wants a war, but if China's best chances of getting to those advanced nodes, right, 5 nanometer, 3 nanometer, the best chances will be to develop homegrown EUV tools, and there are companies that are working on that. However, as I said earlier, the Japanese gave up because it was so difficult. So it's really not that, well, it's very difficult, and that's why ASML has a monopoly on EUV. So for the next 10 years, I don't see any other company being able to do that. So I think for that reason, I think there's plenty of demand for, I guess more mature nodes, for industrial applications and even automobiles. Since automobiles are very big, they don't need small transistors. So there's plenty of business, plenty of demand for the more mature nodes, 28 nanometer, and those types of nodes that China can do. So they'll be busy, and their fabs will be very filled. SMIC, Huahong, etc. They'll have plenty of business, but in terms of the leading edge, I think China will probably be unable to do that for at least the next 10 years.
Yeah, thank you, Mr. Tak. We have a question from the floor. Is it a good time to buy tech fund, Asia Tech versus US Tech Fund? Which is a better bet? Dr. Tan?
Are you asking me or asking? Oh yeah, okay. I think we basically will evaluate two very basic things. One is the price, one is the growth potential. So you really need to go into it. Yeah, like, you can make it more complicated. The race is on now, Everybody knows it's not easy. So, but, the guy who have the money, the guy who has the potential to compete, they will go all out to compete. That's for sure. The race is on. Nobody can block them. It's difficult. Then they will all do on their own. Yeah. So your research is on. Your overall improvement is there. As you can see, electric car, battery, motor, electric motor, and all these things will be on. So we tend to look at some very basic point. Even company in Malaysia or in developing country, they don't have that kind of technology. The price is important. You can just imagine when the market crash, you are able to buy a very good company, very well managed, and you may just make as much money. I would say you can equally make your own money, whether you go to Asia or you go to somewhere else. Important thing is the price is right, the growth potential is there, the management is good. We always do this for my entire life, and you can see some of the company for the last crash in COVID crisis, some of the share just go up like 5.5 months, 12 times, 10 times, within 2 years, some of them go up 22 times, during the crash, So to some extent, some people really looking forward for a crash, then you can make your big money, So that's the main story short. We will emphasize the share price, the growth potential, and then how the management, how good are they? Thanks.
Yeah, thank you, Dr. Tan. Besides semiconductor stocks that have declined, for substantially, some even nearly 50%, PC and smartphone sales are also going to reduce sharply in the second half this year. Furthermore, Nvidia and Micron also gave a negative outlook a few weeks back. So how can we be sure that now is a good time to invest into the semiconductor industry, Mr. Tak?
Yes, thank you. One thing to keep in mind for your audience, for Malaysian investors, is that stocks are a discounting mechanism. They anticipate what's going to happen in the future, 6, 12 months down the road. And from the peak in the end of 2021, semiconductor stocks and tech stocks in general have corrected over 30% from peak to trough. So they've already, in my opinion, discounted a lot of the weakness that's going on in PCs and smartphones right now. Now, if you wanted to time perfectly, right, the buy point, if you go back and look in history, the time that's the absolute bottom in semiconductor stocks is 3 months before the bottom of the earnings estimate revisions, right? That's the absolute bottom. But the thing is, nobody can predict that, right? Because a lot of it depends on whether we have a mild recession, a severe recession, no recession at all, and no one can predict that. So what I recommend for your investors that are listening is that if you wanted to invest this much, right, and you think that this inventory correction that we're going through right now will last 12 months, just divide that investment into 12 months and just invest, that 1/12th of the money every month. It's called dollar cost averaging, but that is the most prudent way instead of trying to time the market. And that's what I would recommend for your investors.
Yeah, thank you, Mr. Tak. Also, the China's contemporary Amprex Technology Co. Limited, also known as CATL, has announced plans to invest 7.34 billion in US dollars is 7.6 billion to build a 100 gigawatt battery plant in Debrecen, Hungary. It will be the company's second battery cell manufacturing facility in Europe. How do you think this will benefit the China or Asia Pacific market, Ms. Farhana?
Yes. The thing is, I'm not sure what do you mean by benefit to China and Asia market, because the factory is to produce battery cell and module for the European automakers. So that includes the Mercedes-Benz, BMW, and Volkswagen. So essentially, it is for the European market. But regardless, the battery and cell technology at the moment is still evolving. So that includes all solid-state batteries, the lithium-air batteries, and also the hydrogen fuel cell. So even to discuss on the cathode and also anode of the lithium-ion cell, that probably can take more than half a day. So in short, we still don't know how or who will be the ultimate winner. The ultimate winner of this probably only after 2025. Yeah.
Yeah, thank you, Ms. Farhana. And also, there's a recent news from that I see is that CATL actually has surpassed Tesla, right, in terms of I'm sorry, it's the BYD has surpassed Tesla in terms of sales. Do you think the trend will continue, that the China EV market will continue to catch up or even surpass the US market? Yeah, Ms. Farhana?
Yes, because essentially, if you look at how automakers' demands come from, right? Essentially, we know that when it comes to the demand for EV, we know that in terms of the US market, it's definitely the trend is there because people are more keen and also more more, how to put it, more aware of the whole environmental issues that's happening at the moment. But then when it comes to China market, they do have a different sort of like point of view when it comes to buying EV cars, because when it comes to China, the total waiting time for you if you want to buy a normal car is actually far longer compared to the EV car. So they do have a different sort of like incentive for them to actually buy into EV cars. And if you compare like even the number of population alone, right, US is about 300 million, then China definitely is about 1 billion plus. So the trend on China sales is definitely big for BYD. For them to focus on China is definitely, they would have more sales compared to what Tesla would have in US. So that's why Tesla also, they are trying to go into, they are penetrating into China market as well to take the EV markets there as well.
Thank you, Ms. Farhana. And according to some of the latest predictions, Europe is set to host around 35 gigafactories by 2035 as part of its strategic efforts to reduce its dependence on ASEAN battery cell imports. How do you think this will impact the healthcare technology sector, Dr. Tan?
I don't see, maybe I'm not so this thing about healthcare. I don't see such a significant, I won't say that also, even healthcare may need some AI support and all this. Basically, I still feel that in our future, I think everything is about technology, whichever way, through automation, through research, through improvement, and I would still think that we definitely very pro new technology because I think these are the growth area. In the long run, you notice that eventually technology will be the key to invest your money.
Yeah, thanks, Dr. Tan. For the same question, how about the impact on the information technology sector, Ms. Prahana?
Okay, so the thing is, I'm not sure how we should classify on the IT sectors, but just as I mentioned on the previous questions, right, the battery technology that is evolving at the moment, right? So while IT can be classified as both designer and also controller and user of the energy, the R&D and also manufacturing will also involve IT. So optimization between our own generation and also the power grid. The power grid itself also would engage into IT. So smartphone also will use the battery, but this is evolving 35 gigafactories per se does not mean that this factory will remain competitive at the moment. Yeah.
Yeah, thanks, Ms. Prahana. How about the impact on the semiconductor sector, Mr. Ta?
Yes, in terms of batteries, they're based on material science, not on semiconductors. So there are no semiconductors in batteries per se. So there are no semiconductor companies that will directly benefit from this, building out of gigafactories in Europe. However, what I will say is that I think it shows that semiconductors and batteries are two industries that are strategically important, and that's why every country now doesn't want to be dependent on other countries. Unfortunately, in this geopolitical, tense environment, so each country or each region will build out their own semiconductor supply chain and also the battery supply chain, as you discussed. Now, I think it's great. I think it's great for the environment because as more and more supply comes on with batteries, which is the most important part of electric vehicles, the supply will increase, the price of EVs will come down, and more of the mass market will buy, and that's great for the environment. The environment will benefit from all of this race to have, domestic supply chains in batteries. Now, if that happens and EVs sell more than expected, there are semiconductors that will benefit. One is actually very well known to Malaysia. It's a company called Infineon, which is a German company. They're expanding their fab. They already have a fab in Kulim, but they're expanding that fab in Kulim. Infineon is one of the biggest automobile chip companies in the world, and their revenue exposure is one of the highest in the world in terms of for automobiles and for EVs. So Infineon is one company that will benefit from this trend, and Malaysia will benefit as well. Another company, as your question is about batteries, they're not in batteries, but there's these systems called BMS, battery management systems in EVs, and you need chips to regulate the battery. Okay, and there, a company called Analog Devices, an American company, is very big. They acquired a company called Linear Technology, which had high market share in BMS chips, and those chips help you get better range by managing the battery energy better and more efficient, and it also helps with recharging times as well. So there are chip companies that will benefit from the trends about the gigafactories, as you mentioned.
Yeah, thank you. How about the maybe Southeast Asia market? Because EV in Southeast Asia market is still, very new. When do you think this EV technology will come to Malaysia? Maybe Ms. Rana?
Sorry, come again?
Yeah, I mean, EV is still very new in Southeast Asia. So when you think it will become common in Malaysia or the Southeast Asia?
It depends on how the government would. So essentially, for me personally, I think that it depends on how government would try to push forward the EV agenda. Because essentially, it's not just about owning the car. For you to bring the car in is easy, but then the most crucial part is that how would you charge your battery car? You don't want to drive, let's say, from KL to Terengganu and then you're stuck in Karak Highway because there's no charger somewhere, right? So that is one of the most crucial things which most of the government essentially has to address first before EV can actually take off. So that's why for people who owns EV, if they drive around the city area, especially KL and also Selangor area, they should be fine because most malls or even most the petrol stations, right? They do offers the charging stations. So, but outside of KL and Selangor area, we don't see that yet. However, if you compare to like Thailand, they do have a very massive electrification strategy where they do provide a lot of charging stations along most of the highways. So that actually can induce people, sort of like encourage people to actually use EV. So until the charging problem, not to say problem, the charging factors, which is the most crucial when you own an EV, until that part is resolved, then only we can start to see EV to pick up around Southeast Asia essentially.
Yeah, thank you, Ms. Farna. So in the future, I think the world will be like charging our EV car, every way, just like charging our phone. And then the following question here is, what is your outlook on the technology market in Malaysia, Dr. Tan?
We basically are a value investor, and I think we basically like to buy an undervalued stock that have growth and with good management. Now, tech stock definitely, in general, have more growth than any other sector in my view, because the new research and everybody is concentrating on that. Just to get back to the EV, even in Southeast Asia, although you say they are not they are not picking up yet, but you take a look at like motorcycle in Indonesia, they do this so-called battery exchange system. You can just join in as a club and you just drive in, pay your money, you just exchange your battery, and the number of people using it is so huge, So I think there will be a way to solve this problem. One of the things is that people were saying that when you drive an electric car, after 200 km you may have problem. But what happened is CATL now came out and say my one can do 1,000 km. That is a real big improvement. You can drive from Singapore to Penang, Secondly, they say they can charge 80% of your battery within 10 minutes. That's another huge improvement. So I see, but then if you sit in an electric car, you buy a Lexus, you pay a lot of money for the quietness, your Lexus. You go into an electric car, I think Lexus, they will outshine Lexus because there's no sound, And that is a huge improvement. If you enjoy listening to radio driving your car, your EV car is so great, So I don't underestimate that part. Now, you take a look at how people move so fast. When you mentioned that CATL went and opened a factory in Hungary, do you know how many people go there also and open? Samsung SDI is there already. And there are many others also going there because Europe will have the highest percentage of people using electric car because they believe in it. So a lot of people, China also go to Poland, China also go to Sweden, Beijing also go to Finland, and you can see because why? They go to the market. And the people now have changed, the whole world has changed. The race is on. Protectionism is getting harder, like they used to enjoy, Yeah. So to answer your question, we are definitely going to spend as much time as we can in the technological stock. Thank you.
Thank you, Dr. Dan. Ms. Prana, how about the Asia Pacific?
Okay, so so around June this year, right? When we look into the market again, we actually anticipate for the market to essentially have a rebound as we see that the inflation point is heading towards sort of like the inflection point at the moment, and most of the unknown risk has been known at that point of time. But however, even at that point of time, we do take into account that there's one unknown risk that will forever sort of like stays unknown. So on this is essentially what's happening right now in China, where the heat wave that's happening in China right now posing a new risk to the whole to the technology market essentially. So we view that initially we thought that when it comes to the heat wave, the initial understanding is that the factory is gonna go shut down for around 6 days because of power rationing starting from 16th of August. But then as the days goes on, the power rationing is now extended to 25th of August, essentially tomorrow. But looking at the water levels on some of the largest lake in China at the moment, that has been reduced to 25%. The power rationing at the moment seems likely is going to be prolonged. So unfortunately, because this is a Mother Nature callings, right? So it's a related risk. So there's no way of knowing how long this heat wave will stay. And since it's already happening a week earlier than what China has already anticipated, so we are closely monitoring on development on this situation. So on different notes, when we do our checks on these situations, right, it does indicate that some of the supply chain, to a certain degree, because previously when China does have their lockdown because of their zero COVID policies back in May, they do, people sort of like, most companies essentially has learned to navigate on how to continue their business even with China lockdown at the moment. So as of now, we don't see any problem with the supply chain yet, but because, like I said, the heat wave is due to a natural cause, so there's no way of knowing of how long that is going to prolong. So to research back to the situation, people would take sort of like a step back to reassess the whole situation, and we may see some corrections happening in the market. So just to extend on this, sort of like to give information on people on the heat wave in China happening, the hydropower actually contributes about 20% of China's power supply back in third quarter of 2022, and Sichuan alone accounts for around 30% of that. So having Sichuan hydropower output being reduced, it could reduce China total power supply by around 3%. So companies like the battery maker that we mentioned earlier, CATL, the car manufacturer Toyota, and even some major Apple supplier Foxconn has already reported their factory shutdown in Sichuan. So and some of the local factories also, right, they do being forced by the local government to actually shut down their factories because of the power rationing. So, and according to some leaked social media, Shanghai has directly asked for Sichuan counterparts to actually consider allowing some of the factories that are being closed in Sichuan at the moment to resume production, because there are lacks of certain parts coming from Sichuan, which in turn led to a suspension of production in factories in Shanghai that actually includes Tesla and also SAIC. So meanwhile, because of these power shortages has been caused by natural events it's not like the man-made shortages that we have seen back in 2021. So uncertainty is definitely going to stay for longer, as China do have a limited redundant fossil fuel-based power production at this moment. Yeah, so we are monitoring this development very closely at the moment.
Yeah, thank you, Ms. Farhana. How about the global market, Mr. Tak?
Yes, the single most important economic indicators to watch is inflation. And back in June, we thought that the market did kind of have a short-term bottom because we noticed that the oil price was coming down, right? And this company called Adobe, a tech company, puts out every month this online price index. And they showed that that prices were actually down year over year. Okay, and online does not have a lot of food shopping, a little bit, but not that much. It doesn't have any energy sales, and of course rent. Online doesn't have rent, so the highest inflation areas is not included online. So that's why online prices were down year over year. But my point is that if you include those three areas, right, general prices are not they're actually down for online. Okay, so as we approach the Ukraine invasion and food prices start to have easier comparisons. Now rent will unfortunately stay high and go up even more. But energy, natural gas prices will be very severe this winter, but gas prices are starting to come down. So as long as inflation seems to be peaking, I think the downside in the market is limited. Having said that, we thought that we would have a retesting of the lows because we thought that second quarter earnings and the guidance for the third quarter would be weak. But we had actually better than feared earnings, right? And that's why the stock market has just taken off and it's rebounded more than 20% from its lows, right? So it's very, very tough time, very tough to time. And I still think we're not going to go straight up in a line, up. And we will have another retesting of the lows. But in my opinion, I think the lows in June were put in for global tech stocks. So again, it's very tough to time. So I do recommend that your investors don't try and time the market and dollar cost average when investing into the stock market.
Yeah, thank you, Mr. Tak. I think this is a question that a lot of people want to ask. Let's just comment on the technology sector alone. Do you think we are near the bottom? Just comment from the technology sector alone. Maybe we start from the global market, Mr. Tak.
Yeah, sure. I do think, tech stocks tend to be more volatile than the overall market. So if the general stock market bottomed in June, I think tech stocks and semiconductor stocks did bottom in June. However, in semiconductors, we're still in the middle of this inventory correction. And that inventory correction can last, through TSMC said that they expect the inventory correction to last through to the middle of next year. So again, I think we will not go up in a straight line, but I think we will correct. And it will depend on, frankly, whether we have a mild recession, a severe recession, or no recession at all, which is, as I said, very difficult to predict. But I do think that the tech stocks also bottomed in June as well.
Yeah, thank you, Mr. Tak. How about the Asia Pacific market, Ms. Farhana?
Like I mentioned earlier, right? At the moment, because there is that the market risk on China heat wave that is happening at the moment, so we don't think that the bottom is near yet, because it is sort of like a developing nation at this moment. And also we do have the Jackson Hole Symposium happening on this weekend, which is at the is at sort of like full focus of every investors in the world at the moment. So people are still trying to guess what Fed is trying to do for September, for their FOMC meeting in September. So at this point, it's very tough to say whether the market has bottomed or not, because there's still a lot of unknown factors that it's still revolving at the moment. Yeah.
Yeah, thank you. Dr. Dan, how about the Malaysia technology sector?
I am a bit more cautious, because I think tech stock has been moving up to very abnormal PE. Now, although they have dropped, some of them has dropped between 40 to 60%, but as you're aware, they actually move it up so high. Now, you look at even NASDAQ. NASDAQ today is still higher than the highest point in 2020, before the last crash. Then you look at Dow Jones. Dow Jones is also higher than the highest point in 2020 before it crashed. Now, your PE ratio, you can drive them up to 40, 50 PE, and then now maybe coming down to 25, 20. Now, it's very difficult for you to say whether 20, 25 PE is low, because you know that the profit may come down. Your profit may come down and your PE ratio go up again. So I will always look into a few factors, but you have a few that today, when someone asks you to recommend stock to buy, you realize that you somehow can come out with a few names, but you are still cautious, Although if you take a look at Taiwan, Korea, China, their shares are not at the highest point. Their shares are at a very decent price. Whether it will go down further before it goes up, we tend to think that US has a very strong influence. I've been saying that for a long time, but I still feel that you got to watch US. If US going to go down, it will be affected. Most of the markets somehow, getting Dow Jones or NASDAQ as a hint. So I'm a bit more cautious. I wouldn't think it's the bottom yet. So it depends very much on your economic growth rate on the next 6 months, Yeah. So if your next 6 months is no good, your PE ratio or the tech stock between 2025 will go back up to 35, 40 again, So, but of course, protected by the company you monitor. If the management is good, they have weathered through many crises before, then you may want to consider. But I'm still a bit cautious. Maybe as you get older, you become very careful, Yeah, young men like Touch, he can go in a bit more. Yeah. Okay, that's all I can say. Yeah.
Thank you, Dr.
But you at least found that you can see that. I mean, Touch would have agreed. You look at in Korea, Samsung Electronic and Samsung SDI, Hynix, they are not at the highest price, Yeah. You look at Taiwan, TSMC, Yagyo, and MediaTek and all these things, they are not at the high. Maybe if you say you put your money for very long term, you are still okay, but we are careful. If the crash comes, I think you'll be a star. That's why I look at it. Thanks.
Yeah, thank you, Dr. Tan. We have a question from the floor. How does ESG requirement impact the technology sector, and do you think there will be a trade-off between these two teams? Mr. Tak?
Yes, that's a tricky question because in terms of impact, okay, the tech sector, like what you do good, it's really limited to financial inclusion, right? Like payments companies. And also, it's limited to like renewables, like solar chips. those two areas are the only two areas that you actually do good, right? Other than that, the tech sector is just not doing bad or using more renewables, but they're not doing anything for the environment, or they're not helping society other than those two specific areas. So that's a tough question. I know that a lot of ESG funds are heavy in technology. I understand that. And so those types of ESG funds screen out bad companies, right? So it all depends how impactful you want to be, how sustainable you want to be, right? My view is that I think the large cap, mega cap tech stocks, they actually do some of the best work in terms of renewables, right? The cloud companies, Microsoft, Google, and Amazon, they've all committed to using 100% renewables, I think by 2030. So, I mean, they're doing so much for the environment. And of course, cloud computing is much more energy efficient than everyone having their own private data center. So I personally think that they do a lot of good for the environment, but they're not making products that actually help the environment, if that makes sense. The unfortunate fact, though, is that you can't get too overweight financial inclusion, right? And you can't buy too many renewables because the solar sector is so dependent on subsidies, and sometimes excess supply comes out. Cheap solar panels come out of China and flood the market. So those two areas are so tough to invest in. So if you're a tech investor, just to focus on the good of financial inclusion and solar chips, that could be very limiting for you. So just you should be aware of that. And that I think that for ESG investing, I think mega cap tech should be included because they are doing so much for the environment.
Yeah, thank you, Mr. Dak. How about the Asia Pacific? I'm sorry, regarding the same question, the ESG requirement and the technology sector, what's the trade-off between the two? Ms. Frana, do you have any comment on this?
This one, I do agree to Mr. Todd just now. It is a very, very tough question at the moment, right? Because at the end of the day, when you look at it, it's a balance between whether you sacrifice technology for development or you go full on into like renewable or even into ESG consideration. Because at the end of the day, when we talk about all these renewable energies, like even solar powers, right? You do know they do require technology for it to run efficiently before it can actually do less harm to the market. So even like in the case of EV, right, people keep saying that electric vehicles are good for the environment, but if we really look into it, the rare material that are being used as part of the rare materials, which is a byproduct of when you make EV, is essentially is normally a radioactive material, right? So can you consider EV that causing this byproduct of rare earth material that is essentially harmful to the environment is ESG? So essentially it boils down to at what line should we put when it comes to ESG talks. So when it comes to that, so far there's still a lot of debates, there's still a lot of talks about it. So it's still, from me personally, I find it's still a very very interesting debates to have, essentially. Yeah.
Yeah, thank you, Ms. Prana. I think this concept is still pretty new in Malaysia. Dr. Tan, what's your view on this?
I think for the last 1 or 2 years, people has already emphasized on ESG a lot. That is actually very good news. People are conscious about what you should do. In fact, you go into the website of the Security Commission Malaysia, they will also guide you to how you become an ESG company. But I must say that it is good and it's very good for the long term for everybody in the world. But at the same time also, I think if you are an investor, you cannot actually say clearly that if you invest in ESG company, you can outperform in a big way on other sector, on other so-called indices, you know. So you still need to, even though you are ESG company, if you are overpriced, it's still not really, you know, that you will outperform, you know. So I think you need to know how to interpret that, in my view, you know. While you're doing good, which is very good, yeah. And I think many pension funds are actually enforcing that if you don't invest in a certain high percentage of a company in ESG, they may just drop you off. That also is very good for the society, you know. Yeah. So I think you also need to analyze an ESG company according to what you think whether you can do well, you know. The ESG company don't guarantee you the return, you know. Yeah. Thanks.
Yeah, thank you. Thanks for the meaningful comments today. We are really thankful to have Mr. Tak, Dr. Tan, and Ms. Farhana here today. We hope you find this session meaningful. And to the participants, we thank you that you joined today's roundtable. We will see you again in the next session. Thank you.
Thank you. Thank you.
Thank
Hush.
you.
I send
Thank
you,
you, Dr. Cheng.
Hush, I send you